Hello, hello, friends. I hope that you are staying warm and cozy tonight. I am recording this right as a huge winter storm is passing through the US, and many hundreds of thousands of people have already lost electricity. I feel very grateful that I am not one of them yet. And my wish is that you are warm and fed and safe. And so, with that, we are going to move into this week's conversation, which is all about cash flow. And I realize that cash flow and really probably most financial conversations want to leave a lot of you with glazed over eyes and maybe falling asleep. And so, in order to prevent that from happening during this conversation, I encourage you to do something fun to re-engage yourself if you find that you are about to doze off. So every time I say the words cash flow, I want you to do something that engages your body, whether it's like 3 snaps or 3 claps, or even maybe if you make it fun, like tap your legs, clap your hands, hit your shoulders, wah, or jazz hands, whatever you want to do. But it is an important conversation to have, even though you might be wanting to avoid it. So let's begin without further ado. And if you wait till the end, I'm going to bring in a little bit of money, energy, and magic for you that will help you kind of move forward from this conversation. So here we go. Cash flow. It is the lifeblood of your business. It is not your revenue. It is not your profit. It's cash flow. And when your cash flow is blocked or unclear or reactive, everything feels harder than it needs to. And when I say reactive, I mean this: you're constantly responding instead of planning. An unexpected expense pops up and you scramble. A bill clears earlier than expected and suddenly you're stressed. Or you're making decisions in the moment because there's no buffer, there's no visibility, there's no margin. So everything feels urgent, even when it doesn't have to be. And that's not a personal failing, that it's really just a systems and clarity issue. So cash flow isn't just about how much money you make, it's about timing, structure, and awareness. And when those things are missing, your nervous system feels it immediately. So, what is cash flow and why does it matter? At its simplest, cash flow is the movement of money into and out of your business over time. But where many business owners get tripped up is this: cash flow is not the same thing as profit. It's not the same thing as your bank balance either. So you can look profitable on paper and still feel broke. You can have money in the bank today and still be in trouble tomorrow. And that's because timing matters. So this is especially important if you use credit cards in your business, because credit cards can create the illusion of stability because expenses don't leave your account immediately. The profit may show up in one month while the cash actually leaves in another, usually the next month. And that disconnect can make it feel like you're doing better than you are until the bill comes due and suddenly your cash feels tight. So cash flow tells the truth about what's actually available, not just what looks good in a report or an account balance, like your bank account balance. So cash flow is also a nervous system issue. And we've talked a bit about systems so far, I think, in the first couple videos that I did, but the part that doesn't get discussed enough is that money doesn't exist in a vacuum. It lives in your body. And when cash flow feels tight or unpredictable or confusing, your nervous system goes into survival mode. You feel anxious and reactive and on edge, and decision making becomes harder. You second guess yourself. You either avoid your numbers or you obsess over them. And I have seen both working in the accounting world. I have clients who are like on it like a hawk, and have clients who just like ignore every email, and request for information because it's scary. But this is why financial clarity isn't just about spreadsheets and reports. It is about safety. And when your systems are clear and consistent, your nervous system can settle. And when your nervous system is regulated or settled, you can actually use the data your business is giving you instead of reacting to it. So strategy and energy are not separate conversations. They work together. So I want to go over a few common cash flow mistakes and why they're so stressful. So I'm going to give you 5 common cash flow mistakes that I see all the time. So number 1, depending on inconsistent income to cover consistent expenses. This is a huge one. If you have consistent monthly expenses, like your softwares or your subscriptions, your payroll, your contractors, those kinds of expenses need to be supported by consistent income. Relying on unpredictable revenue to cover predictable bills is one of the fastest ways to create stress. And a simple shift is to look at your recurring income first. Your monthly clients, your retainers, your subscriptions, however your business is set up, look at the recurring income first and match your recurring expenses against that revenue, because this gives you a much clearer picture of what's sustainable and what's actually left over. And there's another layer here that is critical. If your business collects money before a service is performed and you still have to pay contractors or incur costs later to provide that service, then that money is not truly yours yet. It's not usable cash flow. That money needs to be held until the service is completed, and only after the work is done do you get to claim the profit. So I've seen businesses book really far in advance, spend future service money early, and then not have the cash available to pay contractors when the service date arrives. I actually had a client who I warned months ahead of time that this is what was happening, and they didn't adjust what they were doing, and they ultimately went bankrupt. So cash flow clarity is not optional. It is survival. You have to have cash flow if your business is going to survive. So second cash flow mistake I want to talk about is letting overdue invoices sit without follow-up. So unpaid invoices sitting quietly in the background create silent cash flow problems. In my accounting firm, all of our clients prepay for services. So we send the invoices out on the same day each month, and auto pay is enabled. And this is all done. Like, I set it up to go out automatically. So once it's done, I don't have to do anything unless they have an add-on service one month, and then I'll hop in and add that on. But everything's set to auto pay. And if the payment doesn't go through, then the services pause. So our reminders are automated. Like, if their auto pay doesn't go through, they get a reminder with it, at like 7 days later or something like that. So this model isn't right for every business, but for many, it dramatically stabilizes cash flow. And what I see far too often is business owners letting unpaid invoices sit because follow-up feels uncomfortable or confrontational. And that delay creates unnecessary time crunches and so much stress. So if you have a bookkeeper, this is where they can help if they're willing, if this is part of their service package. So a neutral professional follow-up from a bookkeeper often feels more formal and less emotionally charged. And this is not about pushing responsibility off. It's about using the right support so you don't avoid the issue altogether if you happen to be an avoidant type of person. Okay, number 3, cash flow mistake, making decisions based on your bank balance. Oh my gosh, y'all, please stop doing this. Your bank balance is a snapshot. It is not a strategy. And this ties directly back to what I was talking about having to do with timing. So seeing money in your account today doesn't mean it's available if you have $2,000 in expenses clearing tomorrow. That money was never truly free. So cash flow decisions require looking forward, not just reacting to what's visible in the moment. And this is where cash flow reports matter far more than balances. And I will say, I'll give you a personal example. So one of my income streams always does really well in December. And so I really needed a new computer. I've been working with the same system for so long and it serves me well, but I really needed a new computer and I wanted to buy something nice. I wanted a gaming system because it can handle my workload without me feeling annoyed that it's lagging or that it can't keep up with video editing or whatever. And so I knew that December was going to be a good month for that income stream. And so I planned that January would be the month that I bought my new system. And here I am right now recording this in January on the new system. So that's what I'm talking about making decisions based on your bank balance. Like I knew what was going to be coming in extra. And so I was able to plan a little bit better instead of being reactive, like, oh, the computer's dying. I'm going to buy it right now. No, I'm going to plan this. You have to plan. Okay. Now, number 4, cash flow mistake, waiting until tax season to save for taxes. Okay. This one creates stress every single year. And waiting until tax deadlines approach to think about taxes creates massive cash flow crunches. And more often than not, the issue isn't income, it's clarity. So, accurate cash flow depends on accurate books. A clean, simplified chart of accounts allows your cash flow statement to actually tell the truth about where money is coming from and where it's going. When you overcomplicate your chart of accounts, this muddies the picture and it makes it harder to plan. So, other steps that reduce tax season stress are up-to-date bookkeeping, doing your reconciliations, reviewing those reports each month. Make sure to separate personal and business expenses, which I'm going to talk about next, and organizing your documents, like your receipts and things, checking in with your professionals. Those are the same steps that help you with taxes, but that also support healthy cash flow all year long. So without accurate books, you don't know what you owe, like in your self-employment tax, or where you stand, or what's truly available. So accurate bookkeeping and monthly bookkeeping are super, super important. And hey, guess what? My accounting firm does that. So if you need somebody, hit us up. I'll put a link in the description here. Okay. Finally, number 5, cash flow mistake, mixing personal and business finances. Okay, this is one of the most frustrating and time-consuming issues we deal with as bookkeepers. A single personal transaction can create hours of cleanup. So I'll give you an example. Recently, a PayPal transaction ran through a personal checking account with one of our clients. And because PayPal is treated as a transfer account in accounting software, it threw off the balances of the PayPal account and the balances of the checking account. So what should have been so simple required deep research and reclassification as an owner's contribution because the money came into PayPal from personal checking. And so this is why we require clients to stop mixing finances immediately when they onboard, because mixing accounts, it dramatically increases bookkeeping time. It prevents accurate clarity. It creates legal and liability risks, and it's a known IRS red flag. And ultimately, it keeps you from receiving the insight that you're paying for. So that's a big one. I am a stickler for it. I used to let people get away with it, but we're pretty strict about it now, because we want to give you the clarity that you need for your business to be successful. And we also don't want to waste our time dealing with your personal finances inside of your business. That doesn't make sense for us either. So why do systems matter and why does software help? So I mentioned chart of accounts. And if you don't know what that is, that's kind of the foundation of your financial reporting, of your financial statements. It's what we categorize every single transaction as each month. So you're going to have profit, you're going to have cost of goods sold, you're going to have your normal everyday expenses, and you're also going to have whatever assets or liabilities that you have and your equity accounts. So that's what your chart of accounts is. And I see so many people making it crazy. Maybe I'll do a separate chart of accounts video because that's a whole nother topic. But but this is where accounting software becomes a non-negotiable tool for clarity. So my firm uses Xero exclusively. It's the only software that we support, and we migrate clients into it when they come from other platforms. And why do I choose Xero? Oh my God, let me count the ways. Reports are clean and intuitive. The system is easier to understand. There are fewer steps in the monthly accounting process, so you're saving time and you're reducing confusion. And cash flow visibility is significantly better. So, not to dog QuickBooks, but QuickBooks, everybody uses QuickBooks because they have a monopoly on accounting softwares. And QuickBooks truly is often far more complicated than necessary for most small business owners. So another one that can be helpful is Wave, but that's if you're in very, very early stage business. And another one that I actually used when I first started out back in 2011, no, 2012 was FreshBooks. And FreshBooks does work well for invoicing focused service businesses. So those are a few, but if you want clarity, efficiency, and ease, Xero is truly the best option. And if you're unsure which software to choose and you're about to spend a ton of time researching, then just please trust this recommendation. Xero is Xero for clarity. Okay, so we've talked a lot about logical tools and systems and strategy, but the other half of this is energy. So strategy gives structure, and energy determines how well that structure is maintained. So if your nervous system is constantly dysregulated, even the best systems will feel overwhelming. Regulation creates the space where strategy becomes usable. So this is why cash flow and nervous system work belong in the same conversation. So if you missed it last week, I talked about nervous system regulation and lymphatic flow and how important that is for nervous system regulation. And so this week I wanted to talk about cash flow. So these two kind of go together. They also stand alone. But if you didn't see the one about lymphatic flow, what was that called? Choosing calm in a loud and fearful world, I believe is what that one is called. Quick note on tools if you're not using software yet. If you are not in an accounting software yet and you're tracking your finances in Excel or Google Sheets, I have a free Google Sheets cash flow statement that you can use. You just kind of plug in your numbers and it kind of tells you like what's available, what's going to be available the next month. It's pretty easy to use, but I still recommend getting into accounting software because there you can pull cash flow statements and create budgets, which is another topic we will talk about very soon, how to create a budget, or as I like to call it, game plan. So anyway, look in the YouTube description if you need that Google Sheets cash flow statement, and you can grab it and you can start building visibility right away before you get into your accounting software. Okay, so that was a lot. So if you have any questions, please drop them in the comments. Chances are, if you are wondering about something, someone else is too, and we truly can all learn from the conversation. So in closing, cash flow is not about perfection. It's about clarity, timing, and systems that support both your business and your nervous system. And when regulation comes first, strategy becomes clearer. So I promised you a little money magic here at the end. And so what I'm going to do now is I am going to pull you a money and the law of attraction card. And this is a card deck by Esther and Jerry Hicks, the teachings of Abraham Hicks. I've taken the liberty of shuffling this prior to hitting record, but now I would like to go ahead and simply cleanse this deck because it's been a hot minute since I used it. I've got my little smudge stick here. I'm just going to do a quick smoke cleanse on this because I want this to be nice and fresh. No stagnant energy. Okay. What kind of magic are we pulling for ourselves today? The card that I pulled, achieving success is my natural birthright. Let's see if I can get this to where you can see it. Achieving success is my natural birthright. You are meant to succeed, and failure should feel bad to you. Life is supposed to go well for you. And when it does not, there is something wrong. But what is wrong is not something that is outside of you over which you have no control. What is wrong is within you, and you do have control. And taking control is not difficult to do once you understand the basis of who you are, the basics of the law of attraction, and the value of your personal emotional guidance system. So, if you don't know what that means, what I would suggest doing is looking up the law of attraction. That is to say, like attracts like, you get back what you put out, as within, so without, right? And then look up emotional guidance system, Abraham and Esther Hicks. So with that, I'm going to let you go for the evening. Thank you so much for being here. I hope this is helpful. Please drop the comments or the questions if you have them, and grab that, what you call that thing, that Google Sheets cash flow statement. And if you're just like, oh my God, I just need help. I just need to work one-on-one with somebody because I don't understand this and I don't want to do it myself. I have options if you are wanting to learn how to do your own books. And then we have options if you are wanting done for you services. So what I would do is go to the website. It's ineedaclone.com/monthly special and see what kind of specials we're offering for this month. And maybe we can get together and get you some help. Okay. Thank you so much. Stay warm, stay cozy, stay fed, stay safe. I love you all. Bye.